quick shout out to today's sponsor, Katana. We'll hear more from Katana later in today's episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
All right, welcome back, and good morning to another 0x Research live stream. Myself and Boccaccio joined today again by Shonda Devins. Glad to have you back on, as well as Omnia. With or from at Kinetiq.
Very good.
How are we doing today, guys?
Good to be here. Thanks for having me, guys.
Yeah, thanks for coming on. Omnia, this is like your 5th time on, so I think you've been on more than Shonda.
So many to go still.
Yeah.
We just keep on doing them every so often.
Not
we have to update the people.
Yeah. I guess like to start us off, Omnia, you guys had a very major announcement that was also kind of not particularly public. Like you very much started off. Well, you've had 2 major announcements actually. I guess I don't know how much we want to talk about the TGE, but maybe like, is there something you would have done differently with regards to the TGE and the points program? Now that you like,
yeah, that's a good question. Quite literally zero. I think Kinetiq is in the right place at the right time, in the right ecosystem, with the right people. Everything about Kinetiq today, I honestly wouldn't change a single thing. The trajectory is extremely clear. The people that are working on it, like all 18 contributors, including ourselves, like 3 founders. It's just really a dream team, and everything that's being worked on is just of ridiculous proportions. And the things that we seem to focus on seem to scale by 10 to 100x every time prior to what the idea by itself was, right? And I always talk about how liquid staking in a vacuum is actually an extremely boring business, and how I would weep if the largest liquid staking protocol on Hyperliquid that was truly native to the ecosystem was simply just that, right? And ceased to be anything else. So yeah, that really sets the stage for everything that's happening right now and everything that's to come as well. It's obviously very ambitious for liquid staking protocol today.
Yeah, I want to kind of talk about that a bit because, and maybe the other guys can correct me if I'm wrong, but liquid staking is not a particularly attractive business, but you get lots of capital within your, and that works. Is that how you guys are thinking about it as well? Where you're like, look, liquid staking is the bread and butter, and it's what we're starting off with, but we're very much focused on adding multiple businesses on top of this liquid staking product.
Yeah. Liquid staking, for us, even since the beginning, when we started thinking about building Kinetiq last summer, so about a year and a half ago, we always knew that liquid staking could not be the end game. Liquid staking is very much a wedge. It's the distribution arm. On top of the fact that it is very much an extremely necessary and required building block for any DeFi ecosystem, we had a deposit last week that was larger than the entire liquid staking ecosystem on Monad, for an example, right? The HyperEVM ecosystem is very, very alive and very well. A lot of capital moving through it, a lot of people running strategies with liquid staking tokens already. It's accepted on options desks, for example. It's accepted on on-chain options protocols. So yeah, our mission has always been with the liquid staking arms, ensure that kHYPE is by far and large the most liquid and utilized LST, and ultimately the perfect money Lego for Hype. An example of where kHYPE could end up next, which we don't have influence on besides making sure it's a really robust and sound product, is perhaps BLP. That could be really interesting. There's nearly $800 million worth of kHYPE that could be utilized in BLP without the Hyperliquid Labs team having to rewrite some sort of staking logic that allows staked tokens, which would be locked on transfer, to be used for BLP. So it only makes sense to use an LST, right? And one that's already done all of the legwork in terms of infrastructure, security, liquidity, etc., rather than try and use, already natively staked type, right? Because of the fact that it is a blockchain and you have to respect the things you've implemented on that blockchain, right? Like on staking time or transfer windows from spot to, or staking to spot balance, which takes 7 days on Hyperliquid. So I very much respect that there are things that I don't know, but liquid staking token very much like it's not just cutting corners, but huge for efficiency when with regards to something like BLP. So anyway, that's just something that comes to mind, especially with recent events about things about like BLP coming out, which obviously we're not privy to, but that's okay. I think we've built everything we need to have done to make things happen there, including a recent hypercore listing of kHYPE against USDH.
Yeah, I want to ask about that thing you mentioned with the monad stuff. So this is specifically referring to kmHYPE, right?
No, so like one singular deposit into kHYPE last week.
Oh wow.
So yeah, it was like 509,000 HYPE deposited. kmHYPE actually, like you're right, that's even larger than the single deposit I was referring to. But kmHYPE, with regards to markets, was also history in and of itself. It's the first time an exchange-related LST with an actually disclosed and guaranteed profit share has ever been created, really. This started off as like a really small idea where you could think of, Hyperliquid obviously sets the stage for like some really, really crazy stuff to happen. And a few months ago, we started thinking about it like, what if with HIP-3 and obviously through liquid staking, obviously, you could effectively open up the ability for an exchange to be co-owned by its users, right? Like, wouldn't it be crazy if some portion of Binance was tradable, right? Like, if somebody who really believed in Binance and like traded a lot on the exchange wanted to actually bet on the upside of it, you could, right, and back it, and in exchange for that, take whatever proportional ownership you have in that as some sort of revenue or take for it. And that was essentially what set the stage for what we call xLSTs, or exchange-specific LSTs. And this is more so designed for the launch platform, which is effectively a launch pad. You can think of it as a pump fund for people who want to launch HIP-3 exchanges. Nowhere near the same in terms of like frequency, given like there's meme coins and like $20 million that you need to raise for an exchange, right? Very, very different things. But the point being, the concept is the same, right? Like, you drastically lower the barrier to entry. Nobody needs to go and build a liquid staking protocol by themselves. You can use the battle tested architecture that we've already developed. And then the work will be on you to come and create a really robust offering for people who decide to back you. And in exchange for backing you, these people should get upside in what you're creating, right? This is what kmHYPE is. This is what we raised for last week. And thankfully, in an hour and a half, and why Kinetiq was a really cool part of that was because it was entirely Kinetiq gated, right? So if you were not a Kinetiq holder, and even if you had the entirety of the HYPE yourself, you couldn't just come in and like strong arm your way in. Or even if you were a Kinetiq holder, you couldn't be the only one seeding it, right? So in total, nearly 500 people seeded it, and then like 40 or 50 people bought on secondary markets, which allowed this kind of pre-launch exchange token to be traded, which is very interesting. So anyway, that is the high level of kind of the lore behind what happened, and then obviously like what followed. So
yeah, I guess so just for the listeners as well as my understanding, kmHYPE, you get the deposit, and then that is used for the launch product. So that kmHYPE has a completely different risk profile technically to kHYPE, because kHYPE you
exactly
find kmHYPE is, from what I understand, whatever is like used to launch markets is semi like perma-locked, but not really, right?
Yeah. Yep. So at Kinetiq, we have this philosophy of isolating risk, right? Like any traditional company would, or like anybody in their right mind, right? Like, you would want to segregate the risk between what is a general purpose liquid staking token, which is kHYPE, right? This is like the building block for DeFi. kmHYPE is not the perfect building block for DeFi, right? You are taking way different risk by staking into kmHYPE than you would be for kHYPE, or for vkHYPE, for example, which is the earn-related product, right? That is a different risk profile than kHYPE. So you have the general purpose LST, which is kHYPE. You have earn, which is represented by what we call vkHYPE. This is HYPE staking. Again, like, nobody's losing HYPE exposure under the hood. This HYPE is being deployed by Veda into several different protocols like Project X, Felix, Hyperlend, and it is generating further returns, right, in one specific vault that goes and basically gets exposure on behalf of users, right? It's a way to diversify your exposure to the Hyperliquid ecosystem, get exposure to HyperEVM protocols without having to manage it yourself. It's totally passive. And then there's kmHYPE, right, which stands for Kinetiq Markets HYPE. Effectively, this is Still HYPE, obviously, completely under the hood. You're still earning the native staking yield. But similarly to restaking, without all the nonsense that goes into restaking, you are taking your HYPE and you are essentially associating it with, or delegating it, if you will, to the exchange that Kinetiq is going to launch, which is called Markets, right? The underlying stake will power the exchange. Again, now this is totally separate from the earned product. This is totally separate from the general purpose LST. It will power the exchange in a completely isolated environment without exposing anybody who, Kinetiq is the single largest staking account on Hyperliquid outside of Team, right? Why should anybody on Hyperliquid, even if it was 1% or 10 basis points, have any sort of exposure to what happens at markets, right? If they're just doing regular, DeFi activities, that makes zero sense, right? And this is the case, unfortunately, with a rising trend, if you will, where across the ecosystem there seems to be this blended risk, right? So at Kinetiq, we have very clear philosophies around making sure that risk is completely isolated, and there is no need to basically blend risk across what should be separate products. That's why TradFi, you don't get exposed to certain underlying contracts or exposure if you're just depositing into like a checking account, right, or a regular passive investing account, right? So it should be similar on chain, and obviously with the advantage of being able to do what you want to have freedom over your own capital, but still not get exposed to things that you shouldn't have exposure to if that's not what you opted into. So that's the high level philosophy.
Yeah, I think that makes sense. I guess one of the actual questions. There you go. You can ask it.
I was just gonna ask something about kind of the risk profile of kmHYPE, and like based on my understanding, it's not necessarily pegged to one hype, and it could trade freely, right? Because on one hand, you have this downside that the hype is illiquid, it's locked because the protocol needs it for the HIP-3 markets. But at the same time, there's an upside because in perpetuity, you earn 10% of the exchange revenue, right? So if people expect that this exchange is going to do really well, it might trade at a premium. But if the exchange doesn't do well, there's a risk that it trades below the value, right?
That's right. There's liquidity risk, and then there's obviously like the execution risk of the exchange. So the liquidity risk, any of the 500-ish holders right now could price and trade it at like basically price at a discount, right? So people can come in and actually buy, kmHYPE at a discount if that was the case, right? And then like you said as well, Sean, people could price the revenues for kmHYPE much higher, and anything else associated with kmHYPE much higher, and then people could buy it from them at a premium, or anybody could price it at whatever premium they like if there was a willing taker. So that's the idea, and that's the duality of kmHYPE, and like kind of the beauty of exchange LSTs. Like its stakers make up the pricing of said xLST. Now, the interesting part again, and what makes kmHYPE, I guess, interesting for arbitragers as well, is that all of the hype for kmHYPE is staked under the hood, right? So the interesting part about this is that none of the hype is actually being used to finance anything from ticker related auctions or any other sort of expenses. So all of the hype stays there and is not getting put, it's not getting spent. The protocol, so Kinetiq is still purchasing each and every single ticker, right? And every market and handling all the expenses. It's not like this is like a pool with like a management or performance fee, if that makes sense, right? So I hope that also makes sense, right? Like this is one of the dangers where, a portion of an LST, right? If say some other team is building an LST for an HIP-3 exchange, you have to be sure as a staker that they're not using it for other things that you're not comfortable with, right? Which is like financing the ticker auctions, which gradually depletes the amount of hype that you have under the hood, right? Like if I go and buy an HIP-3 market for 1,000 hype and I've raised 1 million hype, then I'm technically partially unbacked, right? Because some portion of that hype is no longer in possession of the LST. It's been spent as gas to the Hyperliquid blockchain, right? So that has been the philosophy with kmHYPE. All of the hype is there. It's all staked. You can see it all on chain. And, at any time, should the buffer be filled, so to give an example mechanically as to what this looks like, there's 500,000 hype required for HIP-3 exchange, as we all know. What Kinetiq did with markets essentially is have a 388,888 hype buffer so that people can come and go as they please. So if that buffer is full, somebody can come and withdraw any amount of that 388,888, and that 500,000 hype is not able to be withdrawn because it is powering the exchange. At some point in the future, Kinetiq governance will be able to decide whether the exchange should continue to live on or not. And the beauty as to why kmHYPE was gated by KNTQ holders was because the people that are associated with co-owning the exchange just so happen to be completely aligned with the protocol, right? So they're one and the same, right? If you are a kmHYPE holder, you are more than likely, because you can technically buy this in secondary too, you are more than likely a KNTQ holder. Therefore, again, you're one and the same, right? Like your HYPE exposure or some of it is tied to the protocol, managing it on behalf of markets growth. So you should also be able to vote again in the future on whether the exchange ceases to exist or not, and that gives arbitrageurs confidence. People who are obviously interested in having HYPE exposure, and if somebody for whatever reason prices at a discount, will be able to always know they could buy one kmHYPE and redeem 1+ HYPE off that in the future, because it is earning the staking rewards, even if it earns zero money from markets. So yeah, I hope that makes more sense out of it.
Yeah, no, that makes a lot of sense. Do you maybe want to get into the philosophy of markets, XYZ, and what assets you guys are planning on listing? I know that Felix is doing equities, Venture's also doing pre-markets. But I'm curious what you guys are doing. Are you going to compete with them or kind of offer the same markets?
Yeah, it's a good question. I think competition is like really relative, right? Like that was the question for us for 5 months. Like if we were going to compete with like existing liquid staking protocols, and for us the approach was completely different. So I guess naturally you could assume that there will be competition on HIP-3. Who markets competes with is up to the market entirely. But like the idea is that markets is coming to become a beast of its own, right? In our videos, we outline some really interesting ideas for markets that will exist. But the general philosophy is that it'll be all markets at all hours and all on chain, right? So you can always make of this what you will, but the idea being that you can expect the world's biggest markets to be traded on the markets platform. And this is the importance for kmHYPE, right? It's powering the entire existence of the markets offering, rather than going and sourcing the HYPE privately or any other sort of I guess you could say methods by which people can source HYPE for HIP-3. The entirety of the idea essentially was that all these markets can live on chain and be co-owned by the users, right? So there's a world, just tagging onto what you said as well, Shonda, just that there could never be sellers of kmHYPE, or there could be such small amount of sellers that only a single-digit percentage of kmHYPE is in circulation and available for trading, right? And these people would be able to essentially have upside in whatever comes with the markets exchange. So whether that be equities, whether it be FX, compute, energy markets, commodities of any kind, you name it, right? It can all technically exist on markets, and the kmHYPE holders be able to essentially share in the upside of that and not have some sort of dangling carrot, right? Like you have some sort of revenue that you can use to price kmHYPE or whatever that should be, and it should scale with the growth of markets as well.
One question I have here is who's doing your I guess like this is one of the few opportunities I have, because Charlie's very quiet, and the last time I had a chat with him, he didn't want to the exchange at all. So I'm gonna ask this, and you don't have to answer it if you don't want to, but when you're approaching this building out of this markets product, so you're bringing in liquidity, and who's doing because the primary variable here is, and Shonda, you can correct me if I'm wrong, but the primary thing here is like you have to choose the asset name and like what market it is, and Oracle. How are you guys doing the Oracle? Are you working with the how are you guys doing the Oracle side?
Yeah, it's a good question. So the Oracle provider for markets is Keiko. So Keiko is an extremely established institutional data provider. Provides data to the CBOE, CFTC, SEC, all the 3-letter agencies. And yeah, I guess has some crossover with crypto too. But the point being that, the focus for markets is real world and institutional, because you could say offerings and assets that can be traded. So yeah, Keiko will be the Oracle provider for sure. In terms of who provides liquidity, I think the idea is like the breadth of markets should allow for all types of liquidity providers to essentially have a great time in terms of asset selection. Like that is a huge point of the offering. And we definitely expect to have some institutional liquidity providers, especially because of the fact that, the pricing source is expected to be top tier, essentially. We've been working on it for a very long time. And yeah, ultimately people can actually see, like on the markets site, like where we raised the 888,000 hype, some of the features as to, what they can expect from, markets in general and how it'll be priced. So obviously, like what won't be made public is some of the formula as to like how things are priced, but in general, the high level information that traders will need to have will be publicized for sure.
I think that makes sense. And when you say, so Felix has USDH, Trade XYZ is using USDC. How are you guys thinking of the quote asset?
Yeah, we also stated that the quote asset will be USDH as well. Yeah, it only makes sense, right? Like if we're going to have, this, I mean, in general, like Kinetiq is built for Hyperliquid by people on Hyperliquid, right? So why would we use anything other than an aligned quote asset? Competing on the validator operated perp side is something that we noticed probably wasn't the best idea. So therefore, it's really just to bring exotic assets to Hyperliquid, things that don't exist on chain, at least not in the form of like a really efficient perpetual to trade. So yeah, this is why USDH was selected, because it would also make it the cheapest place to trade all of these equity perps and commodity perps, FX perps, etc. Like anything that exists on markets, it will be the cheapest venue by far to trade.
Yeah, that makes sense. Last question I have, and then Danny. Actually, Danny, you can go and I'll just follow up.
Yeah, I was going to ask, I think it's relevant to the discussion here. Like, how are you thinking about kind of distribution or like monetization of the trading activity itself? Like when I look at some of these other like eventuals and some of the other non kind of XYZ listings, there's not a lot of activity happening there.
Yep.
And if you might be competing over potentially some of the same tickers, like I see there's kind of maybe, connection or working with pvp.trade. Like I guess fundamentally, how are you thinking about it's a competitive space? How are you going to get, volume and trading activity to your offerings?
Yeah, it's very competitive. Like that is, not inaccurate at all. The primary difference for markets is that, what we've realized is that CT is a very, very small bubble, right? These things need to be super, super cheap and accessible for anybody to trade outside of crypto Twitter. And while crypto Twitter clientele, if you will, are like really, really valuable to have, they are very much the tip of the iceberg. People seem to forget that PvP is the highest grossing app that's developed builder codes ever, essentially. Probably now neck and neck with Phantom. And the reason they did this is not just because of the pure USD that they generated, but also the fact that they plowed the entire thing into HYPE and staked it. They've earned, high 4 digits HYPE in terms of staking yield now on this. So yeah, I mean, these guys, they know distribution very well. We know distribution very well. And the idea would essentially be that, who we go after in terms of users on markets will be those that are really priced out or inaccessible in terms of, or are in a position where markets of this caliber are inaccessible to them, especially with like the ability to trade a perpetual on them, right? So it's one thing to be able to buy spot, which has its own, I guess you could say, cons. But we believe that you can make a perpetual at some point way more efficient to trade or hold than a spot. So yeah, there is a line between how much you focus on the same pool of users and then how far out you go outside of that. And I guess you could say you can expect markets by far in collaboration with, the different partners that we mentioned, PvP being, the core one. Yeah, you can definitely expect us to branch out far, far away from purely just CT. It is super capped. There's a huge ceiling. And again, if that's not, CT is like usually expected to just trade pure crypto assets. And I think what has been cool to see over the last year or so has been the fact that there's been a lot of bleeding over between like trad assets and crypto in terms of the people that trade both. I mean, like being in the space since 2017, this is the first time I see such convergence between people that are talking about trading, traditional assets versus crypto assets or both at the same time. So I think what will be really cool to see is like what kind of crossover does come on over, but the idea being it's not the target. It's not the end. It's not the end state in terms of target users. The end state in terms of target users is obviously putting, markets in the hand of households, right? Maybe that leaks the fact that there's going to be a mobile version of markets. But still, I think the point being that, yeah, like the ceiling with crypto Twitter audience is very real and not something that we plan to focus on outside of the core users that obviously do come in. So yeah, I hope that helps give a little bit more color as to what some of the direction will look like and why market's not really here to simply compete with any of the existing exchanges. We have a lot of respect for them all, and the idea is not to like sit there and like shit on each other's turf. It's more so just to grow the pie in general. I think if we could bring in net users, which is like the goal by far, it makes Hyperliquid a better place. And yeah, it's not done for purely altruistic purposes. I mean, the idea is obviously to build a really kick-ass app here. But the point being that there are a lot of other ways to go about it besides people who are, really interested in trading for like, maybe a couple of reasons as opposed to like actually solving somebody's problem, right? This is probably best for people who may find it hard to open a Robinhood account or an interactive broker account or something like that, right? Like that's an example of the type of trader that could thrive on markets.
Yeah, I think that makes sense. One more, I guess, taking it away from markets for a second. You guys, and I think this is expected, post points program, you saw a lot of hype leave. I think you made some of it back with kmHYPE. Are you looking to do more and more of these styles of programs to bring in new hype stakers? What's the strategy going forward for that? To like
Yeah,
keep
it's a good
that
question.
very well and alive.
Yeah. So Kinetiq today still has close to 80% market share in liquid staking. And I think what we've noticed is that a lot of people are obviously very, very defensive when interacting with HyperEVM protocols, especially with their forever hype stacks. So in our case, it's more so a matter of how do we make everyone feel as comfortable as possible staking with Kinetiq? And one of the biggest things has essentially been just making sure that any security related concerns are as relieved as they possibly can be. Kinetiq has a ridiculous security culture, and obviously this is not a super public thing, understandably, but so Kinetiq has been audited 6 times, right? First of all, which is absolutely massive. Prior to launch, it was 4. We just did 2 other ones to audit the launch platform and also kmHYPE. So one of our largest audit partners, Spearbit, we also run one of the largest bug bounties in the industry for, which is $5 million bug bounty. And daily, we are monitoring every single type of submission there is on this and mitigating anything that has ever arisen. Thankfully, there have been 0 issues, and the idea is to make sure that that is not the case. So a couple of things that we're rolling out as well. On top of the audit program, we've worked with Hypernative for monitoring systems for a very long time now. And then on the other side of it is like safe harbor related opt-in, which allows anybody who does, in the event of some sort of unfortunate situation, who does like white hat something, they would get a proportional reward and like no ability to like legally, go after them. So like Kinetiq has like put in place a lot of really interesting security redundancies on top of the fact that we have like a massive bug bounty, which should deter, a lot of people from acting nefariously. But also encourages people to, if they find issues, bring it up to us and get paid accordingly, right? Like that's been a big thing. HyperEVM like is very much a quote unquote beta, but we treat this as if we're building on the most established blockchain in existence, right? Like if this was Ethereum, right, this would kind of be considered like a standard thing, right, for like a really large protocol. So we're very much like punching above our weight here, right? That's one thing. And very soon, people can expect some very, very interesting changes on the protocol side that should encourage a lot of stake to flow from Hypercore to HyperEVM through Kinetiq. So again, without saying much here, the point being that, yeah, it is something that is still a really core focus. For Kinetiq, obviously, like the staking component is massive, and it always will be for us. And it's now, again, like the next part, and like you said, like talking about a post-points era or post-token era, K-points still run today. You guys may have seen recently or may not, but quite a few people have noticed that K-points have been going on since November 13th, which is the day that K-points originally ended. So that was really interesting to re-implement. And we saw a lot of people really excited about it, obviously, which is great. And the idea for us now is making sure that a couple of things happen, right? Exporting the liquid staking infrastructure and doing this in a way that is extremely profitable for the Kinetiq protocol and subsequently the kTQ token holders. And obviously now with kmHYPE, markets going live and the exchange being, forced to be reckoned with should be super exciting and like an industrial case study to say the least. The staking business takes, it is still very much front and center, but I guess you could say it is like a dual pronged approach, right? Dominating the staking landscape as well as dominating the exchange landscape is very much going to be a super fun task to undertake. And now Kinetiq can do it without like the quote unquote overhang of like the pre-token state of every protocol essentially on Hyperliquid, but like well beyond Hyperliquid as well. So I hope that makes sense and like gives some color. But yeah, it's definitely an interesting state of the union, and yeah, we couldn't be more excited to be in this position. Like we honestly like we give very little shit about macro micro. We just really focus on what it is that we do best, which is staking, and now the exchange related component with markets on top of Hyperliquid.
Yeah, I think that makes sense. I want to ask a bit more about the HyperEVM after this, but first, Danny needs to complete his task for the day.
Sure. Before we continue on for the day, I want to do a quick shout out to our sponsor for today's stream, Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just TVL. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. All right, back to it.
Perfect. I was gonna ask about the HyperEVM unless anybody has any more questions on the LST stuff.
Yeah, I guess I have one question more about the tokenomics of Kinetiq. So I'm wondering how you see the role of the Kinetiq token. Like I know for markets, 10% is earmarked for kmHYPE, 90% is going to be used for growth initially. Do you see more of that eventually going to the Kinetiq holders, or is it more like they just got whitelist access to the kmHYPE product and more of the value is going to flow to that?
Without divulging too much about Kinetiq specific future developments, what we did soft announce was kHYPE-1. kHYPE-1 is going to be very interesting. Having a staked version of the Kinetiq token very much allows Kinetiq to do really, really interesting stuff in terms of positioning the token as the very heart of the ecosystem, which I don't know how anybody could deny is very much already the case, if not shown already by kmHYPE. The future product rollouts should be very apparent that Kinetiq is extremely important in everything it is that we do. There's been I had a conversation recently, and I've seen a lot of things happen like across the industry around like special differences between like tokens and equity and stuff. And at Kinetiq, that's never been the case, and that never will be the case. The token is everything for every single participant, whether it's investors in Kinetiq, which is pretty much the lowest across the industry for a liquid staking protocol at 7.5% sold to investors. For contributors, same exact thing. That is the only upside essentially every single participant has. And then again, obviously the same for the entire community, right? So the Kinetiq token float was the largest of any liquid staking protocol practically ever. For context, even above Jito at like 150% larger in terms of supply that went to an airdrop. So yeah, I hope this helps to kind of send a message in terms of like where Kinetiq stands. And short-term price action is not something that affects really anybody on our team when we're focused on doing a lot more than just like liquid staking, especially. An example, like going back to like the investor related conversation as well, something that was super interesting about like when Kinetiq raised. So like I've been pretty public about the fact that, Kinetiq raised in 2024, well before even the launch of HyperEVM, and, well before we went live in July, and now well before, the token itself went live. It is extremely, extremely important like to have the context that the team is looking at this through, because otherwise, it just looks like any other liquid staking protocol. But Kinetiq has raised less than $2 million, sold less than 8%, so 7.5 to be specific, of the protocol to investors, and has basically gone on to have essentially the highest growth to cap table or growth to invested raised amount ratio out of pretty much any protocol outside of Hyperliquid. So that in and of itself has been extremely important to see play out, and is very important for what's next. Usually protocols that like oversell, especially the liquid staking side of things, to investors, end up having to battle a pretty interesting, let's just say, path, right? It's like one path is like you essentially just hoard up whatever you can for like the first couple of years and like know that the token essentially is doomed for the first 2 or 3 years of trading, or you essentially give as much as possible to the community and then essentially build up from there. And regardless of what happens, the protocol is positioned to be very, very different than liquid staking. Those that price it as a liquid staking protocol, are able to do so, and that's perfectly fine. It's a free market. But the intention has never been, since we started thinking, like I said, about Kinetiq in 2024, the intention has never been to remain a liquid staking protocol whatsoever. Like I said, Hyperliquid allows you to do really, really interesting stuff. And if it wasn't already clear, the fact that Kinetiq is building infrastructure on top of Hyperliquid to export its liquid staking offering, and then on top of that, take advantage of the applicative, technology like HIP-3, like where you can build a proper application on top, is definitely not something that is normal by any means. And we're very much trailblazing in the sense that this is not the case with any other ecosystem. We have a lot of respect for what Lido and Jito have built in their respective ecosystems, but the fact that Hyperliquid is an exchange and like it houses that flagship application that it then allows for the creation of applications on top of that, for us to not use this staking component to basically build into something like that, would be really sad. So that's exactly why that's not the case. So yeah, in a post-token era, it's if anything, it's actually better for us, right? We're obviously extremely keen for whatever comes, but obviously very excited to see like believers in the Kinetiq protocol like ride with us for whatever comes next, which is obviously markets in early January, and beyond that with launch, where anybody will be able to launch their own exchange on top using the Kinetiq infrastructure. So yeah, not in it for a couple months of glory or whatever that came with Kinetiq being the largest liquid staking protocol, and still is, but very much in for the whole picture, if that makes sense.
That does make sense. So just, I guess, like to clarify one thing there, you don't have any plans to launch a new token for markets, and
no, not at all. I don't think. I mean, I had
you
recently
only have the token, right? Like,
there's only Chain-owned. There's nothing else. Like markets will never have its own token ever.
Yeah.
It is all. It is a Kinetiq product, through and through. That's why it literally says in the bio, it's by Kinetiq. So yeah, it's very funny you say that, because I'd seen some speculation on like markets having its own token. That would literally never happen. There is only one K-Points program. There's only one token, and that is it, right? Like there will not be anything else. Kind of like Coinbase and Base, right? Like I think coin holders would be very upset if Base ever tokenized, right? And rightfully so, right?
Yeah.
So anyway, that would never be the case with Kinetiq. Yeah. What's that?
I have this theory that I've had for like a year now, is that Base is going to have to tokenize, because they've put themselves in a position where they kept saying the token is very important. The token is very important.
Have they really said that? I've actually never even seen them say like they would. That's crazy.
Jesse Pollack is very much like coin it, right?
Oh yeah, God.
So I can't imagine that. We'll see. I don't know.
Hopefully they don't coin that.
We talked
for the sake of coin shareholders.
Yeah, and that like brings a whole new dynamic into it, right? Like it's because in crypto, it's very much like there's privately owned equity and then token, and then that's like the issue that you have, versus like now if you have like public equity, and then
it's like borderline fraud in my opinion, right? Like you have like companies that will basically like take the equity on the back end and like shaft token holders for the sake of like, I don't know, raising or something. Like it's like practically like, I don't know, daylight robbery in a weird enough way. So yeah, that would literally never be the case with Kinetiq. It was funny enough, like we had a conversation about that the other day. Like somebody had brought that up, and I was almost like bewildered that this is like a thing, but it's a very real concern, right? Like it's a very, very real concern that some, I don't know, entity is like pocketing equity, like revenue on the equity side, and like the tokens get nothing because I don't know. Anyway, so the point is like, I don't know. Kinetiq is very pure in that sense, and like we have a very purist mentality about that. Everything should be clean, very straightforward, and there's no muddiness between is there some sort of private equity deal that takes something or not. Like everything is done like really transparently. Our treasury is on chain entirely. For really interesting updates that are coming out, every single bit of revenue will be detailed, and like how it's split and whatnot. So yeah, the point being, yeah, I don't know. I mean, I feel it almost feels weird saying that. Yeah, we would be an anomaly in that sense. I thought that by now that would kind of be industry standard, but I guess not. So
Unfortunately not. I think I have like two more questions. One is, and these are more broad questions. One is I don't think you guys are the oldest protocol on HyperEVM.
no,
But
definitely
you've definitely been there for quite some time.
Yeah.
And I feel like
HyperEVM launched in February of this year, and we launched in July. And the reason why was because of the fact that Core Rider was not ready for a few months. So it was some of the most grueling times because obviously wanted to get in there and get after it. But yeah, it was good. I mean, we had almost a year to basically like build up every sort of integration that existed for Kinetiq pretty much day one, and the ones that followed after. So yeah.
How has the HyperEVM landscape changed in your opinion? Especially, I would say like pre-BLP, post-BLP, and then also over the past 1.5 years. Like you clearly talk to more of the ecosystem participants than any of us. Maybe Shonda talks a lot more as well. But how has like competition changed, opinions changed, the community changed in terms of builders, etc.? Like any key takeaways or any thoughts that you have over there?
I think a lot of tourists have been rinsed out, and as usually happens, like as naturally occurs in ecosystems, and that's okay. It's actually preferred, if anything. Like any ecosystem, right? Hyperliquid has its tourists, and they will naturally see themselves out. At Kinetiq, like Kinetiq was born because of the fact that we are very much like Hyperliquid maximalists in every sense of the word. That doesn't mean we don't take other things into consideration, but if it wasn't for Hyperliquid, I don't know, I would have a lot less faith in the industry outside of Bitcoin. And obviously, like yes, smart contracts are great, but the point being that I don't know, it would be a significantly less interesting, like probably to the tune of like a fraction of a fraction, right? Not just because the playing field was completely evened out, but particularly due to the fact that Hyperliquid is really the only shot today. And honestly, like somebody can try and correct me if I'm wrong on this, but today Hyperliquid is the only protocol. And it's funny that I'm even saying the word protocol and not just saying like business, right? Because usually you would expect this to be a private business of some kind. But Hyperliquid is the only protocol today that has a shot at basically making Binance essentially obsolete at some point. Portfolio margin is an example of this, which I think is great, and we can touch on in a little bit. But the point being that Hyperliquid has accomplished, like I say very often now, the holy grail of what exchanges essentially could never offer because of the fact that they are jurisdictionally handicapped. So an exchange, a centralized exchange, obviously has this, jurisdictional lock to be like that prevents them from doing certain things. But they enjoy the ability to obviously like keep user deposits and custody them and do whatever the fuck they want with them. Essentially, they're incentivized to not act horribly because of the fact that if you do anything wrong with user funds, like you are obviously going to be held accountable for that. So they are obviously incentivized to play nice, but that doesn't mean that they have to do everything according to industry standard, as if there is any. But Hyperliquid already by itself came and changed that with the non-custodial nature of Hyperliquid. Now, the next level of the centralized exchange grift is launch your own L2, right? And then obviously give said L2 a token, right? So Hyperliquid is once again like breaking this, reality because of the fact that the HyperEVM launched in complete connection with the flagship application, which is the exchange, right? That alone, in and of itself, is exciting. Even if we were not building Kinetiq, that alone would be super exciting and warrant, doing things with. But after that, right, like you have the subsequent ecosystem that followed after like a massive wealth effect with the Hype airdrop, and Kinetiq's placement is very interesting because all of this wealth needed some place to go, right? Like, there's still what I don't know, $10 billion or something of that nature worth of hype in circulation today, that has to go somewhere, right? Liquid staking is a natural kind of next step for that, and then leaping off of that pad into the ecosystem is kind of like what follows. So how I look at the HyperEVM maturation is like, I don't know, we're at the part where the early touristic adopters kind of fall off prior to like real developments, making the ecosystem stand apart. What we did with liquid staking is obviously not a novel thing, but the way that we do it is interesting. We're taking the stake on the EVM side and routing it to Hypercore, right? This is why public companies stake with us. This is why institutions stake with us, and so on and so forth. So I guess how I look at HyperEVM today versus how I look at it in a year is pretty path dependent, but I do believe that it is still the most exciting general purpose smart contract environment to be in. Not because there's like an insane amount of apps that are doing crazy things, but because of the fact that the ones that are, such as Kinetiq, you can really get behind, and there will be pure innovation that follows. So that's where my head is personally at on it. I still believe HyperEVM is like a massive component to what makes Hyperliquid what it is. That doesn't even talk about like builder codes, which I think justifies Hyperliquid's valuation today alone. A lot of people may disagree with me on this, but the point is, if you value Hyperliquid like a stock, like there's no business in the world today that exports, $5-6 billion of liquidity without charging $1 for it, and makes money on whatever flow net new traders bring in. So this is my general view, right? Like nothing is positioned like Hyperliquid. I still do believe that Hyperliquid is going to where it deserves, which is going to be like several $1,000s, and that doesn't imply that it's going to be worth like trillions of dollars. But who knows what happens with 40% of the circulating supply, right? Like, or the non-circulating supply that's reserved for community. Does that get burned? Does that get distributed in some way, shape, or form? I'm personally in the camp that it gets burned, similar to Binance burned, a bunch of self-minted BNB. So yeah, I mean, I'll go out on the edge and say those things, but like, this is why like the state of Hyperliquid is actually very fluid. But in my mind, it's a really simple thing, right? Like there are very few protocols on Hyperliquid today that are not forks, and Kinetiq is pretty much sitting at the very top of that list, and we plan to ensure that stays that way. So yeah,
very good. Omnia, we're coming at the hour. I want to ask you to show. You've already done everything you can, but what do you want people to check out? I think everyone's already quite familiar with Kinetiq, but like, is there anything specific that you want them to look forward to, look into? What should like people do as they at the end of listening to this conversation?
I would keep an eye on HIP-3 auctions. That's pretty much it.
Very good. Okay. Well, Omnia, as always, an incredible pleasure. I appreciate you coming on and spending time deeply into.
Yeah, thanks for having me, guys. Appreciate it a lot. Obviously, very good to be back as usual. And we'll obviously run it back at some point in the future again. But yeah, for those that have questions on staking their hype, you can always DM me or chat publicly on it, or any questions at all around like any Kinetiq products or what's coming. So should be great. Appreciate it, and I'll catch you guys on the other side.
Peace.
Thanks for coming on.
Cheers, guys.
Peace.
I guess before we discuss anything else, one last shout out here for Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users that purchase Katana can earn boosted yield from cat incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. Really ought to find out whether that campaign is extended beyond November.
We're gonna figure it out. Okay. Guys, I think Mondays are 1 hour, so I think this is us. This is it. Shonda, I appreciate you coming on 2 weeks in a row and asking multiple questions. It's very kind of you. For reference, I had a very funny moment with Shonda today where, wait, I'm gonna see if I can share it. He was like, I need to get a haircut. And then I was like, okay, well, can you get it before the pod? He was like, yeah, okay, I'll get it before the pod. And he sent me this picture, and I thought this was what they did to his hair. random like VC. But he informed me that it was Gemini. So I fell for AI slop. It's the first time.
And just imagine if my hair actually was cooked like that. He told me I have to turn on the camera specifically and show my side profile. So
I think
should tell you something about working for Bulk.
very good. Okay, and on that note, we can end it. Danny, again, a pleasure to be here with you as always.
Hey, always glad to be on with you, gentlemen. Always glad to have Shonda on the show. 2 in a row is incredible. Let's see if we can get him for 3. I don't think we will, but
We're
maybe
gonna figure it out.
next time you go to the barber, I guess if you walk in and you could just say, "Yo, Chief, please just fuck my shit up." I'd love to see the Gemini picture in real life.
I mean, he already kind of does it, right? These Zoomers and their mullet cuts is insane. Sean, do you want to give a? Yeah, it looks good though. It looks hard. He's muted. It looks good.
He's muted.
He's muted. He's
He can't even sell it right now. That's crazy.
Oh, but it looks good. He's gonna beat me up when I see him next.
I mean, we're hunting you, right? That's part of the itinerary. So
Yeah, very good.
I think that's how it might be how Axelar token holders feel right now. They just got robbed right in front of their faces.
That's something to
Another
talk about. I'm gonna try and bring on. Dude, Noah went on Empire.
I know. Can you let's be real with this guy. What is going on here?
Everyone wants to play in the big leagues.
He's going around us, going straight to Big Janowitz.
He's fucking shopping around. Same thing. James Kristoff did the same exact thing. He came on our show 3 times and he went to Gore.
Yep.
It's crazy.
Said these guys aren't big enough. I gotta go elsewhere, get my ideas out in the world.
Crazy the disrespect we get. All right. To our listeners, I hope you had a nice Monday and I hope you have a great rest of the week.
Thanks for tuning in. Catch y'all next time.
thanks, guys.
Thank you, Shonda.